Shares of Apple today down about $5, but don't tell that to someone by the name of Gene Munster. He is the senior research analyst at Piper Jaffray. He says Apple will be a sure thing in 2012. Gene, I know it's your #1 pick. Lay out the case for us. Why do you like Apple?
It's pretty simple. They're going to have a lot of new products, and the growth rate's going to be a lot higher than where the street thinks. The new products in 2011, they didn't have any new form factors. It was a pretty quiet product year for Apple. In 2012, new iPad, new redesigned iPhone, and Apple Television, we think, late in the year. So there's going to be some product excitement for once in a long time. And separately, is the street's looking for 14% growth for next year for top line. We think it could be as high as 28%. So the combination of those two make this, I think, a really compelling opportunity over the next 12 months.
Hey, Gene, why are you at 28% for top line growth, double where the street is at 14%? Why?
The biggest reason is if you look at the iPhone and the opportunity within the iPhone, it's half of their business today. I think a lot of the analysts expect that they're going to lose share to Android next year because the real growth in the market is going to be coming from some emerging markets. But our perspective on how the whole iPhone is going to play out in 2012 is very different than I think how the rest of the street looks at it. And what we're picking up today in the channel from Asia is that they're having more momentum than I think the street is aware of in terms of their iPhone business. And so that's the biggest difference as far as the 2012 estimates, is we're more optimistic about the iPhone.
And we know TechCrunch, Gene, is reporting that the Apple 4S just got clearance to be sold in China. So backing up your point, that feels like it's going to give even more wind to the sales, if
Definitely.
That's true. What about the idea that they, for example, 4S, I know, underwhelmed some consumers here in the U.S. I've heard that perhaps maybe a new tablet is going to be released, you know, in the spring of next year. Is that going to annoy people that just went out and bought something new for Christmas?
I mean, you kind of, I guess you live by that and you die by that as an Apple consumer. You know that something new is going to be coming out right around the corner. So I don't think there's going to be much backlash related to that. I do believe, though, that if you look at these iPhone 4S results, when we see them, it will show that despite the fact that it was a ho-hum upgrade, a lot of people came out and have bought the product. And our tests show that about 93% of people who buy iPhones buy another iPhone. So good news for Apple is they don't have to really have eye-popping products to get the people to upgrade.
You know, Gene, I can understand the comment about people wanting to go from one iPhone to the next, or from an old iPad to a new iPad, et cetera. But how saturated is the market for iPad or for Apple products in general?
It's really not at all. If you look at the overall smartphone market, it's 18% of the smartphones are Apple phones, and smartphones in general are about 30% of the overall phone market. So that's pretty small. If you look on the computer side, it's about 6% of the PCs out there are Macs. It's a lot higher in the U.S., call it 30% in the U.S., but there's still share to gain there. And on the tablet side, who knows where that market goes? Ultimately, we believe it's going to be bigger than the 360 million PCs sold a year. Right now, it's about an 80 million unit market, so there's a lot of growth to go there. And then on top of that, you've got the TV coming, which just adds another dynamic to the growth story.
So 607, do we have your price target right, Gene?
That's correct, 607.
All right, well, we want to turn the page as well and talk about Amazon while we have you, because this is another one of your top picks. Why do you think this stock is going to outperform in the new year?
It's all about growth for Amazon. It's all about top line. People don't care about the bottom line. Amazon obviously has concerned some investors last quarter when they reported September. They didn't have the big top line upside that investors typically like. One of the reasons why we like it near term is because we think that the December quarter, based on a lot of third-party data we're looking at, they did well in the December quarter. And separately is if you just look at the opportunity in e-commerce, 7% of what's bought in the U.S. is bought online. If you go to Europe, it's 5%. Latin America, it's 2%. China, it's 1%. Ultimately, as the generations turn over here, it's going to be 35% is going to be bought online. So there's a huge shift that's going to go online, and obviously Amazon is dominating that. And so we like it both near term on the December quarter, and the longer term fundamental is that they're running the table on what is still a big emerging market.
Gene, we learned from the earnings report last quarter that profit margins have dipped to below 1%. I think they came in about 0.7%. What does Apple need, or rather, what does Amazon need to do to turn that around and get profit margins moving the other direction?
you know, it's a joke, the profit margin. They spend like drunken sailors, and that's probably not going to change. And the reason is that they see this big market opportunity, this big shift from offline to online, and they just want to dominate in a lot of different aspects, whether it's invest in the Kindle. To answer your question, it's going to be a long time. I don't think anybody should own Amazon shares for the hope of an improving gross margin, operating margin, profitability. I think you own it for the top line.
What about Kindle? I mean, since we were talking about Apple before, it's hard not to think about Amazon's competing product. How do you see this fitting into your opinion on Amazon in the new year?
Amazon, it's basically a two-player race in the tablet market. It's the iPad and Kindle, and they're really taking share from a lot of the other non-iPad devices. We still feel very good about our 13.5 million unit number for iPad for December. To answer your question, how does it impact? There's a whole market that really can't afford a $500 iPad that is just loving these Kindles, and we track on a daily basis the ratings, and the ratings are still very high for Kindle. About 50% of people who rate their Kindle rate it a 5-star rating, and so it's a great product for that low end. Yes, there are going to be some people that aren't going to buy an iPad, but I think the size of this market is emerging a bit fast enough to accommodate both.
Hey, Gene, the e-commerce market, this holiday season that seems to be sort of winding down here this week, up about 25% versus last year. That's pretty considerable growth. How sustainable is that level of growth on e-commerce platforms?
You know, obviously the numbers get harder every year. I think the big surprise for e-commerce for this holiday was that there were difficult numbers. We had hard comps this year, and yet we saw acceleration over the numbers last year. And so to answer your question, how difficult is this? It's difficult, but if you look at the size, back to the size of the market, the shift in dollars from offline to online is so significant. I think you can see impressive numbers like this from the broader e-commerce space for potentially years to come.
Okay, Gene, we thank you for the time. Gene Munster joining us there from Piper Jaffray, weighing in with his two picks, Apple and Amazon, for the new year.